Welcome to CBDC session on preparing, planning, and controlling financial budgets. In this session, you will learn the elements of a budget and how to build and use a financial budget plan to monitor and control your business. To be a successful entrepreneur, it is important to be able to plan and forecast the financial areas of a business. In this session, we will explore why budgeting is important and what can happen when budgeting is not used to monitor and control the financial aspects of a business operation. We will also introduce different components of a budget, how to build and use a budget as a tool to manage your business. The direct benefits to planning and preparing a budget is that a budget is the tool that helps the owner to forecast the revenue and expenses an owner anticipates, as well as a tool to analyze and control the financial activities of their business. A budget is made up of the financial data from two aspects of a business. It is what has happened in the past and what can be expected to happen in the future. These two financial activities are blended to build a budget. It is often commonly referred to as budget forecasting. When a business owner applies budget forecasting, it helps a business owner to identify what is working and what is not working, specifically where a business may be making or losing money, or even if the financial business goals are or will be met. Overall, budget forecasting will help a business owner make informed decisions. The goals of planning and controlling a budget are to make sure there is enough money to keep your business up and running, enough money to grow the business, and enough money to have a reserve for emergencies such as the pandemic crisis many businesses faced in 2020. The advantages of using a budget are that it provides a picture to help you see the small details, the integral workings of the money flowing in and out of the business. It becomes an aid to help you in identifying any financial problems. It is a financial mapping activity, so business owners can identify what actions may need to be adjusted to ensure the future financial goals of the business are achieved. By using the budget as a mapping tool, business owners can go back and readjust the financial numbers as the business progresses through its first year of operation. After a year of operating, a business owner can examine and compare what they had originally projected to the actual financial activity that took place. This information will help the business owner make solid financial decisions for the next year's budget. Business owners that have gained knowledge and skill to develop budget forecasting will be prepared to submit funding applications, apply for financing through banks or loan institutions, attract investors, and apply for government grants. Remember, these organizations will want to review your forecasted financial budgets for 2 or even 3 years. Business owners often worry about money, and this worry keeps them awake at night. An advantage of budget forecasting is that it gives you peace of mind. By planning the business's financial activity, using paper or a spreadsheet such as Microsoft Excel allows for the business owner to review the numbers again and again. Budgeting is a tool that can reassure a business owner and other organizations that good financial business decisions are being made and the ability to assess if the business hits a rough patch. It has the financial resources to get through it. There are many business owners that admit they had taken the wrong approach in developing a budget for their business. Here are some recommendations they would like to put forward to other business owners who are developing a budget. 1. Going back and reviewing your budget is the most important thing you can do again and again. 2. Triple check you are not missing important expenses. 3. Put your financial activity down on paper instead of keeping it in your head. 4. Do not let others create your budget. This is your business, and by asking someone else to do it, prevents you from having a clear understanding of the numbers, and it prevents you from making informed decisions. 5. Believing in yourself and trust your instincts. 6. You need to look at the numbers often, especially if you think your business is in trouble. 7. Ask yourself questions. How much money do I have? Am I watching what I'm charging on credit? Am I watching my expenses closely? 8. Remember, budget forecasting does not require fancy software. You can use paper, an Excel spreadsheet, or even Google Docs to plan and create a budget. When planning and preparing a budget, you need to execute market research and mapping the potential financial activity you anticipate for your business. The first step in preparing and planning a budget is doing your market research. By doing market research, you will be able to estimate the potential market demand for the product or service you intend to offer your clients. Through your market research, you will gather information on businesses that operate in the same industry as you do, and potentially gather information about what your competition is charging for the same product and/or service you are offering. Market research can be done by accessing industry reports from the Government of Canada's Industry Trade online database website. This website has information on all types of businesses operating in all industry sectors across Canada, whether you are operating a small, medium, or large business, in retail, manufacturing, or transportation. It also has information that will inform you about the industry trade standards of your business in respect to the average annual expenses and revenues. The information you retrieve from this site will help you plan and forecast your business's financial budget, especially if you are a startup business and have no historical financial data to draw from. The next step in preparing and planning is mapping out the potential financial activity for your business. This can be done by using a spreadsheet, a sheet of paper, or by using an Excel or Word document. To forecast a budget, you will require a column that will identify the item of the expense or revenue. This information runs down the left-hand side of the page as demonstrated in this image. Adjacent to the column listing your expenses and revenue items, you will need to create 2 columns. For each month, you can begin with the month you started your business. In this example, it is November. Each month requires 2 columns. One column should be titled Actual. This actual column is for the information you have gathered from the research you did through the Industry Canada website, or the information you have from the financial history of your existing business. The column next to the actual column will be titled Budget. The budget column is for revenue and expenses that you expect to generate as you move your business forward through the calendar year. After you have created a 12-month spreadsheet to record the actual financial activity of your business based on the historical or industry information you gathered, you can use these figures as a baseline amount to help you project what you expect to generate each month in the budgeted column. Once you have completed your 12-month spreadsheet and you have entered all the amounts in both columns, you will need to add 2 final columns at the end of the 12-month period. These 2 columns will be the total amounts. One is for the actual historical or industry amounts for all 12 months financial activity, and the other column totals the projected budgeted amounts you entered. By mapping out the past and future financial activity using a spreadsheet, you will provide yourself with a visual tool that you will be able to use as a way to determine what you need to generate to keep your business moving forward. Lastly, a common pitfall for business owners is they tend to forget about the forecasting budget altogether. This can put them in financial distress. It is important to understand that planning your financial activity through budget forecasting will help you to monitor and control the financial aspects of your business operation. As you begin to place your financial activity in a spreadsheet, it is important to apply the following 6 strategies. Strategy 1: include a financial buffer. Where forecasting is not an exact science, a rule of thumb for business owners is to overstate your expenses and understate your expected income. This strategy will allow you to have some financial movement for any unexpected fluctuation in cost or in sales that you did not anticipate. Strategy 2: consider your costs critically. Always look for ways to cut expenses without affecting the quality of your product or service. Constantly ask yourself, What return am I getting for my money? How does this purchase help my business? Use the adage, what do I need? Versus what do I want to remove unnecessary spending, as you should only be purchasing what you need to keep the business operational. Strategy 3. Expenses relating to sales. Only include expenses that are directly related to the business. Do not be misled by including expenses you think you can write off. A good business owner will ensure that expenses relate only to making the sale. Strategy 4. Suppliers' discounts. A good business owner will ask, what payment term discounts do my suppliers offer that I can take advantage of to reduce expenses? For example, do they offer a 2% or 4% discount if you pay the bill in less than 30 days? If suppliers do not offer early payment discounts, then consider keeping your cash in the bank to earn bank interest on it, or potentially use it for something that is more immediate. Remember, however, to leave time for a payment transaction to reach your supplier to prevent any late penalties. Strategy 5. Shop around. Don't be afraid to shop around for new suppliers. Be thrifty. Make deals. Make an offer for less than what you have been paying, especially when you are purchasing bulk quantities. It is important to keep an eye on the costs of your materials that you are using to make your sales, to ensure that you are still making your intended net and gross sales margins. Do not be afraid to negotiate or switch to a new supplier you can depend on, who is offering you a better deal. Strategy 6. Continually review your financial budget and develop your business skills. All business owners need to revisit and revise budgets on a regular basis, at a minimum, once a month. And always be aware of your accounts payable for any outstanding bills. CBDC would like to invite you to learn more about budget forecasting in our next video session, Building a Budget. As well, if you have the time, we invite you to download a case study that will take you through a budget forecasting exercise for a bakery store. Thank you for watching Planning, Preparing, and Controlling a Budget.